growing regions in the world. And obviously, that would mean that it would also lead to substantial energy demand increase in the coming years. And that would mean new capacities have to be added, as well as a lot of efforts on the demand side efficiency also has to be taken. And all this would require financing. And what I know in terms of numbers, almost 2.6 trillion US dollars would be required for this kind of infrastructure to be taken care of in the coming years, next 20 years, for this clean energy transition to take place. Um, and obviously, with this increase in energy demand, uh, the entire South Asia needs to transition towards a cleaner energy systems, given the forecast for this burgeoning needs for energy demand in the near future, and also the region's vulnerability to climate change. India, Bangladesh, and Nepal have announced ambitious clean energy plans for the next 8 to 10 years. And the commitment of their respective governments is clearly evident from the evolving policy framework, but also from the actions that are being taken up. And if I just wanted to give a few highlights of some of the major clean energy commitments by the governments. For example, in case of India, we are all aware 500 gigawatt of renewable capacity addition, and also reducing the carbon intensity of economy by more than 45% by 2030. These are the mammoth tasks the government of India has set it for itself, and that would require a lot of decarbonization in different sectors, including buildings, transport, industry. All these would be very critical. Bangladesh, for instance, has cancelled almost 10 coal-based plants worth 12 billion and is also working towards a sustainable energy mix. And as the country proposes to derive almost 40% of its energy from renewables by 2041. Nepal again aims to reach net zero emission by 2045. Similarly, Bhutan again already very committed to environmental conservation and low emission economy. And again, they're also looking at e-mobility in their transport sector, and even energy efficient housing is being given a lot of thrust in Bhopal, in Bhutan. Sri Lanka again aims to reduce emissions and achieve carbon neutrality by 2050. And our renewables are targeted for 70% of the national energy needs by 2030. Maldives government has also announced net zero plans by 2030, and they're also committed to increasing its adaptive capacity to reduce beach erosion and land loss from uncontrolled human settlements. So practically all South Asian countries have similar mandates, and the bottleneck remains financing. And that's why this session we would like to, address some of the challenges in the financing and also talk about certain mechanisms which are already there or can be created. So the conventional means of raising capital or investments obviously are not enough for meeting this unprecedented investment requirements of the South Asia region, and particularly when you're talking about clean energy transition. And if we have to mobilize sufficient capital, the solutions deployed by some of the practitioners are required to be understood. Also, we need to understand the application of financing instruments like blended finance, green bonds, InvITs, alternate investment funds, um, how they can be used by different South Asian stakeholders. So, today in this particular panel, um, we will discuss some of these things like identifying the major challenges with regards to clean energy financing, particularly relating to mobilization of investment in the South Asia. We will also discuss and perhaps shortlist certain possible strategies for mitigating these challenges, and also review and suggest some major financing instruments or mechanisms that can be deployed for mobilizing investments in this region. So, with that, I will hand over and I will call Mayank Bharadwaj, who's also a lead on financing and procurement, to take over the session. Mayank.
Uh, Thanks, Apurva, for Setting the context, myself, Mayank Bhardwaj, I'm the lead for the investment mobilization and finance for the SAREP program. Uh, on 2nd of May, we had a session from the NBFC side, and I will just borrow a quote which one of the panelists mentioned from Caspian. I really like it. It said, "Water, water everywhere, and there is not a drop to drink." And the clean energy investments are actually, moving in those direction, or it's following that direction, because what is happening is that the capital providers, every time they tell us that they have lots of money to give, but when it comes to the ground, the on ground piece, the investments are not really happening. So what is wrong? Where are we going wrong? And why are the investments not coming in? So, as Apurva mentioned, we'll try to see what are the challenges, what are some of the solutions that some of the practitioners in the panel have actually used in the past as well. Uh, and with that, I'll just maybe move on. I have a small presentation just to set the context. And if you can just put up the presentation, I'll just take you through some of the areas, some of the possible challenges, what we feel, what we have found out. Just try to set the context, and then the panel, our elite panel, can just come in and provide some of the ways in which they've tried to tackle those challenges. Sorry for the font. I've just taken a leaf out of Anurag's book. He used this graph and I really like it. Just an updated version for Irena. I know it's on the font size. My apologies for this, but just two or three things which I wanted to show through this graph. So if you see the total investments in the RE are about $339 billion. That's an average number. And if you see the red portion, it talks about South Asia. Apurva mentioned about the growth of population, the one-fifth population of the world is held in South Asia. But if you see the investments are only about 4% of the annual investments that are happening. That is the first point. Second, if you see uh, on the left hand side, in the morning, there was a discussion on the DFI financing and all. But ultimately, when the money starts to follow or, come into the investment piece, come into the projects, the, the proportion and the dependence still is on the commercial capital. DFIs, the governments, they can actually create the market, but ultimately it is the commercial capital that has to take care. And if the same thing can be seen in the graph, if you see the two on the left hand side, the two big, I'll try the pointer here, but the two big thing on the commercial side, they constitute about 60%. And if you then move towards the technology side, again, the solar takes bulk of the piece along with onshore wind. So that is in a mix what is happening right now in the global space from an investment point of view. Now, if I move on to the clean energy investments in South Asia, I just, I've put out this piece wherein it talks about the various investments, some of the commitments Apurva has already mentioned in her, remarks on what India wants to do, what Nepal wants to do, what Bangladesh wants to do, and there is a definite push. There's a definite commitment from each of the governments to actually go ahead and become clean. This is a big, step which they have at least taken to make it or define a target which is to be taken. But if you look at the sort of investment requirements that are there, they're huge. Apurva mentioned the $2.6 billion investment that is required in the next 8 to 10 years. If you, from a comparison perspective, look at it, if I combine all the installed capacity that has, been there in the South Asian countries as of now, the investments or the total cumulative investment will be about $450 billion. So what we have done in the last 40 years or 50 years, now we have to do it in the next 10 years. And that too in a scale which is a bit unprecedented. So this is the opportunity. This is what we have to achieve. And for any bank, any investor, any DFI, this. So if I Then move on. Now, what is happening? So if you see again the graph which I've put up on the left side, it again talks about how the investments have happened in South Asia as compared to the global global investments. So if you see South Asia is about 3 to 4% as I mentioned. What is happening is again one of the fastest regions of the world, 1/5 of the population, but something is not happening. What is not happening? So on the right side of the slide, there are some challenges. So we had done a study sometime back, 6 months back, and we have spoken to about 50 to 60 stakeholders across various South Asian countries, and we have come up with some reasons why this is not happening. So some of the things, if you mention the macroeconomic risk, insufficient domestic pool of capital. Now, that is something that uh, is one area that is solvable. More international capital coming in, how it is coming in, how we can bring it in. Again, a topic for discussion, which I'll try to put in some pointers, but ultimately it'll be taken up by the panel as well. High costs of financing. Again, by the time it reaches the consumer, the costs of finance are high. We have known in the e-mobility space 18%, 20% sort of interest rates, maybe higher for the green hydrogen piece as well. Hedging. I think that is again a topic of I should not say great debate, but yeah, that is a point of a long discussion. Hedging. If you add up the hedging cost in the USD dollars which you've raised, it may also increase or more than the domestic capital cost. So again, what can be done? And then some of the ways to possibly monetize your current assets, recycle the capital, put the domestic capital back into the market, provide certain instruments wherein the risks may be lower for the international capital to come in. So the avenues or the instruments for such monetization or recycling of capital may not be there. So this is just some of the challenges I've pointed out. I've tried to put in some enablers, try to define a problem a bit more. Uh, Again, the first point: alternate source of fund required. Domestic sources are not are insufficient from that perspective. Cost of hedging, and then absence of the regulatory structure. And then I've tried to put some possible solutions. So if you look at the middle column, it talks about mobilizing international capital. It talks about actually taking a step and doing some transactions which involve bit of a risk. I know the first mover we call it, but that requires some sort of a first step to be taken by someone who can come in and then create a template for everyone to follow. Again, financial framework, regulatory framework. In some of the countries, as I mentioned, the insufficient avenues, we don't have much of a regulatory framework for maybe an InvIT, maybe for a green bond. So, how to really bring everything back on track, put in a conducive policy framework so that people can come in, the international investors can come in and actually put in money. Uh, Now, if I move on, again, bond market, I think this has been uh, a discussion point since the last 10 years or 15 years, but I have to put it because that is again one of the realities. The domestic bond market, very shallow, started to pick up. People, expected with the, at least in the Indian sector, with the sovereign bond market or the sovereign green bonds coming in, there is a lot of expectation that it might become deep. But that again is a problem because then the domestic bond markets are not there. The capital recycling cannot happen. And again, the RE projects, the bankability issues which are there. I've tried to put in certain things at the bottom, saying that what we are doing, we are actually helping a lot of entities in raising capital, raising funds. We are actually getting into a discussion wherein we'll be raising green bonds also for some entities and trying to create market, trying to create templates which can be taken up by others, which can be taken up by the other entities, and the capital can start to flow. So again, we're trying to play the role of an enabler, of a market maker, and trying to put in the market based instruments ourselves, not trying to distort the market, but based on the principles, trying to get in the investors, and then hopefully the market starts to follow. So yeah, so this is about it. I thought it's better that you listen more to our panelists who are there. Uh, I'll just introduce the panel. So I have, and I'll just request the panelists also to come up on the stage as I call their name. So we have Mr. Inamul Karim from ITCOL. He heads the renewable energy business. He has played an instrumental role in design, inception, and implementation of ITCOL's renewable energy initiatives. He has about more than a decade's experience in the renewable energy sector. Sir, if you can join us on the stage. Then we have Mr. Ramkrishna Katiwada. He's a development finance professional, about 21 years of experience. He heads the Nepal Infrastructure Bank. Um, Again, he has played a lot of leadership roles in various institutions, worked for the Investment Board of Nepal as well. Mr. Vishal Bista, he is the investment manager, energy lead at Dolma from Nepal again. He's responsible for leading investment transactions and interacting with portfolio companies for their operations as well as exits. Work experience spans across multiple sectors, including renewable energy, banking, manufacturing, and real estate. Then I would like to call upon Hari sir, Hari Krishnan. He's a general manager credit from IFCL. He has about 22 years of experience across development banking, project finance, policy matters. Uh, at IFCL, he's been part of teams and he has also been involved in various transactions relating to roads, railways, metros, InvITs, etc. Then I would like to call upon Neha. Neha is the head of South Asia program for Climate Bonds Initiative. She drives policy, strategy, and partner programs to scale up the green bonds. And she has also served on the Ministry of Finance Working Group on Sustainable Finance Taxonomy and international ESG standard setting bodies. Uh, Basically, the efforts are targeted at building policy mechanisms and market infrastructure to accelerate financing for green, uh, just and resilience transition, and as well as creating capacities for sovereign and non-sovereign climate risk and transition finance. And then Dipto, he's part of Shardul. Shardul Amachand. He specializes in projects, project finance and banking, represents international infrastructure investors, asset management, project developers, and he has advised on some of the most recent and complex projects. So, one involving the Masdar investment into Hero Futures, as well as Alliance Capital Partners in their stake in the India Infra Trust. So, this is the panel, and finally, I would like to call upon Namrata. Uh, she is the Deputy Chief of Party for SAREP program, has about 18 years experience. Sorry, Namrata, I don't have your profile here, so maybe I'll just put it out. And with that, I'll just ladies and gentlemen, this is the panel. Hopefully, we're able to get some solutions from them today. Uh, and let's see how we can move ahead. So the idea was to start a dialogue, start to have some learnings in place from the practitioners themselves, and then maybe go back and think that what can be done from that. So, right, I think with that, I'll just hand it back to Namrata.
Thanks, Mayank. If not anything else, I'm sure SACEF is teaching me to do better time management. My eyes are always on the clock. But I hope we have a very interesting panel discussion. Good afternoon and namaste, everyone. It's a great opportunity to moderate today's session on what works, innovative financing strategies in South Asia, with a very esteemed panel here with us today. The theme really is mitigating strategies and use of innovative financing instruments. And I'm glad Mayank has already outlined the challenges. So, given the time that we have today, I'd like to just focus more on the innovative, financing strategies that the practitioners here who joined us on this panel can just throw some light on, so that we can have exchange of, experience, and also allow some time for the audience here to ask some questions. In terms of the flow of the panel discussion, we'll have two rounds of questions. The first round will be on a broad theme based on your expertise and the organization that you represent. And I will restrict you all to kindly, sort of abide by the time limit of 5 minutes when you're talking about, the question that I ask you. And in the second round, I will again kind of ask a generic question to all of you and ask you to limit your commentary to around 1 to 2 minutes. So we'll try and manage it within the time that we have. With this, I will begin with the first round of questions and we'll go right to left. So I'll start with the and with Mr. Enamul Karim Pavel, Head of Renewable Energy at IDCOL Bangladesh. Mr. Pavel, IDCOL has become a well-known financial institution in Bangladesh for financing medium and long-term, actually large-scale infrastructure and renewable energy projects. And what we've learned in your green banking policy, you've prioritized green financing and environment-friendly technologies and solutions, and also introduced innovative measures such as creation of climate risk fund, etc. So in this context, Mr. Powell, what strategies that have been deployed by IDCOL that has enabled in accessing, capital, in fact, unlocking the access to capital for interested, clean energy project developers? And if you can throw some light on some of the ways in which the cost of finance has been optimized while financing such projects. So over to you.
Thank you very much. As you already know, I am representing IDCOL Infrastructure Development Company Limited. We are a government-owned financial institution, and we have been created actually to develop infrastructure project and also support private sector, particularly in implementing those projects. So we, being a government-owned entity, we can only support the private sector. So in case of private sector projects, we have to ensure bankability of the projects. Otherwise, we cannot actually invite the private sector to come forward. So for last 2 decades, in fact, we started our uh, uh, renewable energy activities back in 2003. So almost 2 decades, we are actually financing renewable energy. And recently, we have started supporting energy efficiency projects in Bangladesh. So, with actually, clean energy financing requires a huge amount of investment at the beginning, and also it requires long-term financing. Otherwise, it cannot become financially viable. It cannot attract the private sector. So, what we have done, when we actually uh, try to actually develop one particular type of technology and to introduce in the market, we actually made some detailed financial analysis of the projects, and we actually see the demand of the project sponsors and also the end users, affordability, and based on that, actually, we structure the financing. We can, we, in some projects, we provide long-term financing only. Also, in other projects, we based on the requirements, we also arrange grant support for the project. So most of the fundings actually are coming from our development partners in Bangladesh. Almost all development partners in Bangladesh actually supporting it all. So when we have to access the funding, we have to actually make sure a business case after detailed analysis, and if that is actually acceptable to the development partners, then only we can actually access the financing. So far we have actually we initiated with the support from the World Bank, IDA funding, and now all development partners are working in Bangladesh, are working with us, it called. So and also we recently have become the accredited entity for Clean Climate Fund. So we are also arranging funding from Green Climate Fund. Already we have got approval of a particular project for energy efficiency around in the range of $256 million. So government is actually being a government entity. We are getting support from the government to arrange funding, and at the same time, we have to have actually support from the development partners. Otherwise, it would not be possible so far to actually implement those projects. So, I can cite particular example. In case of rooftop solar projects, we are actually providing concessionary funding, and probably the tariff in Bangladesh at this moment is for industries during daytime is around 8 to 9 cents, and if we structure the funding in such a way that it's below the rate government is asking, then industry owners will be interested to avail the funding. So uh, that's how actually we attract the private sector. I can cite an example of our another project. This is solar irrigation that requires credit support as well as grant support. So I mean, we have to have good incentive for the farmers, because all of our projects are actually market based. We have to actually develop the project for the market, and once the market is accepting the project, then only we can implement the project. Then only we can convince our development partners or other sources actually to participate in the projects. So we are not only financing loan, but we are also, I mean, asking our local financial institutions like our banks and FIs. Those are also participating in Bangladesh in our projects to support and implement the renewable energy projects. So and also, as we are working for a long time, we are also selling our CERs, certified emission reductions, in the international market, and from that also we are arranging some money to actually support our uh, clean energy initiatives. So that's how actually so far we have managed funding. But going forward, we can see the government has huge, I mean, target, and that will require huge amount of funding. So the support for development partners is good, as Mayank mentioned. It actually says the mm, I mean, market says the ecosystem, but to scale up, it requires support from local market, from support from international market. So we are working with the I mean, the private sector arms of development partners, so that we can arrange funding for the upcoming projects which are already in the pipeline of us. So that's all from my side. Thank you.
Thank you, Mr. Pavel. I think very interesting points around helping emerging technologies like rooftop solar, no longer emerging, but I think when it started out, you have helped in concessional financing as well as solar irrigation projects, is what we heard. And also, you're managing now currently the GCF portfolio as well, with being the accredited agency as well as the CR's market. So those are all interesting, areas where IDCOL is supporting, Bangladesh partners in clean energy finance access. So I'm going to move on to Mr. Ramkrishna Khatiwada, CEO of Nifra Bank, Nepal. Mr. Khatiwada, Nepal has ambitious plans to increase its power generation capacity through the development of various hydropower projects, and also now looking at solar as an alternate source. And we know that the Nepalese financial sector has always been a paramount enabler in the development of the sector. But given the targets that the country has set for itself, particularly the ambitious net zero targets, we do see a significant financing gap which currently exists in order to meet these targets. So, in this context, we'd like to understand what strategies have been deployed by NIFRA to unlock once again the same issue of access to capital, and if there are any ways in which cost of finance has been optimized while financing, clean energy projects by you. If you can provide some examples once again, that'll be great.
Okay, thank you very much, Namrataji. So, before going to the particular question on the what NIFRA is working on the innovative financing instrument, so as you mentioned, the financial sector has played a very larger role in developing the energy sector in Nepal. Nepal's financial sector has invested around 4 billion, committed $4 billion in the renewable energy project that help in producing around 2,700 megawatt of the project, and that there are another 2,500 megawatt size of the project are under development and under construction. That is because of the directive lending provision of the Central Bank of Nepal. Based on the regulation, each and every bank and financial institution has to invest 10% of their total investment into the energy sector. Because of that is happening. But now, coming to the new future and the target of achieving net zero and achieving the energy generation target, as well as the investment target to the energy generation, transmission and distribution system, as well as green building, transportation system, which requires a very huge capital. Based on the IFC study itself, $46.1 billion dollar investment is required to achieve that target. So in this context, what NIFRA is working, NIFRA being a infrastructure financial institution, we have two major mandates. One is financing to the infrastructure project, that includes the energy side, and the second is the development financing, which include the engaging the policymaker, policy advocacy. Second is catalyst to promote the different kind of the financial instrument and initiative, and the ultimately financier. In terms of the innovative financial instrument, right now we have been working on the different fronts. One obviously is the green financing arrangement. So in terms of the green financing, we are in process of accessing green finance fund, the GCF fund also, and parallelly issuing the green bond. In terms of the green bond, we have been working on issuing around 50 million USD of the green bond in the interest market with the INR synthetic. Because of the currency hedging and because of the other issue, we chose that INR synthetic rate to because INR and the NPR is a peg. That is one area currently we are working, and even issuing in the USD green bond, even SAREP is helping us to streamline the whole process. Second is other alternative investment mechanism, because plain vanilla structure of the debt and equity will not work out because of the fiscal constraints from the public resources, as well as the existed capital by the financial sector as well as private sector. So crowding out of the capital available in Nepalese as well as international market through the financial instrument like the InvITs, that is also area that we have been working with the regulator and other agencies and the stakeholder to come up with the InvITs and work on the asset monetization mechanism. That is one area. Second is the blended finance approach. Ultimately, the energy sector transition in the South Asia will not happen if there is a affordability and the viability. Ultimately, there should be the affordability or competitive pricing structure of the energy production, as well as the viability from the investor point of view, viability from the financial institution point of view. So for that, blended finance approach is one area that NIFRA has been working with the Ministry of Finance to come up with a blended finance regulation that has been initiated and already going on. Another area is managing the currency risks is one of the challenges in the infrastructure financing, especially clean energy financing. So in terms of the managing those currency risks, NIFRA has been working and creating very soon. We have already applied to the relevant government agency for the approval of the creation of the hedging fund. That hedging fund will work on the managing currency risks. Basically, the especially on the PPA is in Nepalese drum. So managing that PPA in the Nepalese drum by indexing the currency or USD currency, that is one area currently we are working. And the alternative investment fund is another area that private equity player are emerging in Nepal, and the NIFRA is also setting up one energy fund and one infrastructure fund. In very soon, we have already taken some level of the approval from the relevant stakeholder and even from the competent authority. So these are the activities right now we are working on the alternative financing mechanism. Over to you now.
Thank you. Thank you so much, Mr. Khatiwada. I think it's very encouraging to listen to the whole gamut of innovative strategies that you're using. I think more interestingly, because you're able to play a role in policy advocacy with the government Ministry of Finance, it will help the larger, investment community in Nepal to look up to all the initiatives that NIFRA is undertaking. So thank you for that. I will move to Vishal now, Vishal Bista, who is representing actually the private equity industry in Nepal. Another very unique and interesting story. The private sector has proven its instrumental role in the Nepalese energy sector, Vishal, and precisely in the generation segment. But given the considerable, target which has to be achieved by 2030, there's a 15,000 megawatts target. I think the financing for private sector needs to be strengthened. Internationally, private equity has been playing a crucial role by providing capital. So, in this context, as the first private equity fund of Nepal, I think we'd like to know from you what strategies have been deployed by Dolma to address the issue of the two fronts: access to capital for clean energy projects, and what are some of the ways in which you have tried to bring down the cost of finance while looking at, bringing in international capital. If you can give some examples, that'll be great.
Thank you, Namrata. So I'll mostly talk about Dolma and how we have tried to reduce social risks in the project to bring the cost of capital down, as well as increase capital mobility so that it's easier for international capital to exit. So talking about Dolma and innovative financing. So back in 2014, when we started Dolma, it was quite innovative for Nepal and it was quite new for Nepal. So we were either confused as lenders or we were confused as charitable organizations. So people would come us and ask, so what is the interest rate that you are offering? So that was not clearly the case. And from that context to where we are now, we have a alternative or SIF, specialized investment fund regulations. And there are lots of private equity local players that have come up. And through Dolma and through this mechanism, as you rightly pointed out, the commitment is 15,000 megawatts. And to meet this 15,000 megawatts, there is a large funding gap. So as someone earlier pointed out, that the generation in Nepal is largely led by private sector now. So over 50% is led by private sector. And even in construction, there's a huge private sector involvement. And there's a large funding gap. And how do we meet this funding gap is by attracting international capital. And these local players, local PE funds, would be able to access international capital because we have set the scene for other players to come in. In terms of our own projects, for energy projects, as I talked about reducing social risks, so how we do it is by introducing or by incorporating local involvement in the capital structure. So we mandate that our companies include local participation in the capital structure. So if the company goes for an initial public offering, they have to mandatorily do it. So they have to mandatorily separate some amount for the local participation, and we mandate that our companies compulsorily go for listing. This has two benefits. One is it reduces social risks because the local people are invested in the project. So therefore, there are less social issues in the project compared to where there are no local participations. And it's for our capital mobility as well. So the regulation in Nepal, it allows the hydropower companies to list during construction, which means that the projects will be listed while it's under the late stage construction. And therefore, we have significant time for our own exit as well. So it's kind of two front uh, that it touches. Besides that, we are also working on green bonds, and that is for our own projects as well as other operational projects in Nepal. We are working to bring in green bonds. The reason for doing green bonds right now is because once the projects are operational, the risks are quite hugely reduced, and it's easier for international capital to come in once these construction stage risks are over. And these are some of the areas where we have been working. Thanks, Namita.
Great. Thank you so much, Vishal. I think, again, very encouraging to learn about SIFs, I think, and the fact that it is allowing domestic PE funds to come up in Nepal. And I think more interestingly, Dolma is paving the path for international, capital to flow in to Nepal, which is again very interesting for others to learn from. It's also very encouraging to hear that you're considering green bonds. We do have Neha here on the panel, and I'll move to her shortly. But before that, I'd move now to the left of my panel, and now first to Mr. Hari Krishnan. Shifting gears slightly, because we'll now look at the large investments required in infrastructure projects, type of energy projects. And we know that given the fiscal constraints that exist, public investment can only mobilize a limited capital, and therefore public private partnerships have emerged as a principal vehicle for attracting private investments. And on this, given this model, given that India's leading government-owned NBFC, IIFCL, is mandated to provide long-term debt to PPP projects, what strategies have been deployed again by IIFCL to again address the two issues that I asked my other panelists: access to capital for clean energy projects, if you can focus more on the clean energy projects, and some ways in which, once again, cost of finance has been addressed by you in the form of optimization. If you can give a few examples, that will be great.
Thank you, Amrita. So
As far as the financing of clean energy and renewable energy is concerned, uh, there has been a kind of a mixed experience in the last decade or so. So, a lot of initiatives have been taken by the government in terms of bringing up with the National Clean Energy Fund, so which is accessible to the public institutions. And the funding for the National Clean Energy Fund is by way of a levy on the coal sector, and those funds are available to public institutions for disbursing to the renewable energy sector. So, and further, renewable energy certificate mechanism is also being put in place. So, along with the renewable purchase obligations, so this has also been a game changer in the renewable energy sector. And further, green energy corridor projects have also been propounded by the government of India, and which has taken care of the transmission constraints, where power is produced at the one end, because these renewable energy projects sometimes are in the remote corners of a state, and the utilization is on the at the other side. So these are some of the initiatives. And further, Reserve Bank of India has also recently come up with a framework for green deposits, where institutions like us, NBA, which are classified as NBFCs, and financial institutions and banks can access the deposits, and then for an allocated deployment in renewable energy sectors. As far as IFCL is concerned, IFCL was started in the year 2006 with a focus on majorly on PPP projects. So traditionally, we have been, our lending has been tilted more towards the transportation sector to the extent of about 40%, and balance 40% was more in terms of the fossil fuel based energy, which realization has now come because we also have funding, multilateral funding from World Bank, ADB, and lines of credit from European banks. So now we have consciously reduced our intensity in terms of the funding for the fossil energy sectors, and it's based on we are moving towards the renewable energy sector. So we also have a subsidiary which is called as IFCL Projects Limited, who work continuously with the various state governments as well as local bodies, and we help them, come out with their policies in terms of the renewable energy sector. And wherever funding is required, IFCL will also, chip in for as an anchor lender to attract the lending from other institutions as well as from the international investors. So, at a broader level, if you can ask me, of course, there have been success in terms of financing for the clean energy, but there are also some challenges which may be specific to the renewable energy sector, and larger issues still remain in terms of, for example, in solar energy projects, still the land issues are a challenge. So some models are being worked out. We are in discussion with the government and our co-lenders, that whether there can be an SPV kind of a model which is promoted by the government, in the sense that the shareholding is first held by the government or by the authority concerned. So till the bidding stage or till the project obtains the clearances for the various ROW availability and the clearances, and after that stage we hand over the project to the private developer to take forward the implementation and the operations. So these are some models which are working on. It's in the process.
Thank you, Mr. Harikrishnan. I think slightly different perspective, but very important perspective about how enabling policy frameworks can sometimes help in unlocking access to capital. Also, what's interesting, it particularly for large infrastructure projects where there's significant risk during the construction phase till you move into operation, to look at models where you spoke about the SPV structure, where government stake is involved, so it helps in uh, the clearance related risks issues, and then after that you move into a competitive bidding for encouraging private investment to come in. So all interesting models, and I'll come back to you, but let me just finish the first round of questions, and I'll move to two of our other experts on the panel who are going to bring in slightly different but very important perspectives. And with this, I'll move to Neha from the Climate Bonds Initiative. Neha, Mayank already spoke about South Asia being one of the fastest growing regions in terms of the need for energy as well as economic development, and hence the requirements for clean energy deployment and the corresponding investments are huge. And you've also heard the other panelists with regard to the need for unlocking international capital, particularly to flow into this region. So, in this context, based on your experience, and I'll take the liberty as the moderator to ask you two questions. The first one is, what do you think green bonds can, and how do you think green bonds can help as an attractive financing instrument, particularly for the South Asia region? So, if you can, from your international experience, give a few examples, and what are some of the considerations that need to be kept in mind for, issuance of green bonds? I think that will be very useful for stakeholders who are present here. I'll come to the second question after that.
Thank you, Namrata. First of all, just a couple of lines on what climate bonds does. Like Dolma, we also get confused sometimes that do we have money of our own to put into projects, which is not the case. We definitely help in other ways in terms of helping borrowers of money, issuers of bonds to be able to tell them that what is a credible green project would look like and what are the investor expectations. So when it comes to bond markets or debt capital markets, I think one opening remark is why are we looking at capital markets in the first place? And it is simply because of the reason that most of the investments in which are climate oriented require a huge upfront investment. They are long gestation projects. So bank lending in that sense doesn't really match up to that because there is always an asset liability mismatch. So theoretically, technically, you would require funds which can be moved at scale and which can be moved for a longer duration. And in that sense, debt capital markets, of course, are the right places or right to borrow from. And that said, globally, I will not go back into the numbers. We do have it is when we start talking about thematic financing or green financing through debt capital instruments, it is mainly an investor-driven market, and that investor pool lies in developed economies, lies in the economies of the US, Japan, Europe mostly. And that therein lies the opportunity, but also lie in the barriers, where emerging economies find it difficult in some ways to access that market. And yet, what we have seen in terms of just the way the volumes have been growing, we also see that there is a huge opportunity, say, within the South Asian region to be able to access that market. Usually, large projects which are backed by strong balance sheets, utility scale projects, are the ones which have been tapping the offshore investor and green capital pools. In India alone, some $25 billion worth of green bonds have been issued. And most of that has been dominated by renewable energy companies and some big actors in the transportation sector, very small volumes in other sectors. Also, within the clean energy space, there have been some domestic issuances, and there is a reason why we should also be giving due attention to domestic capital markets to be able to finance some of these projects. Simply, one of the important reasons is that you need to be of certain volume and scale to be able to access international investors. A thumb rule would suggest that something like a $200 million worth of the project size will be the first, or below that, usually investors will simply screen out. Yeah. So, and what we have seen in the Indian market, when I'm talking about India, I will also like to contrast it with other countries that are right now present on the stage. That India says that globally speaking, around 12th or 13th in where it comes. Global green bond market is about $2.7 trillion. China is the biggest one in the emerging economies. And India stands at the sixth position. Now, Nepal, Bangladesh, Bhutan, all of them. Let's be very clear that at least the domestic pool is very, very limited, right? So in any case, if you have to attract international investors through these instruments, you will probably need other supportive mechanisms, Okay, so it is not going to happen on its own. The currency risk will be too high, and all of that things. And as you can see, that in Sri Lanka there has been one green bond issued, which is a very small one in agriculture space. In Bangladesh, I think there's again a very small green bond, which is backed by the renewable energy assets. And Nepal and Bhutan are talking about it, but it is not going to be easy, right? Because and yet not impossible if there are other incentives in place. India can show some pathway towards it. There are three main things that we have seen, that we've experienced, which are extremely important in drawing private capital. One is pipelines. They need to be visible. They need to be bankable pipelines, and for that a lot of effort goes into that. IFCL is sitting here, and they would be able to exactly tell you, because most of the projects are not. They don't have the ratings to be able to come to the market, so they would require some kind of guarantee, some kind of credit enhancement. So pipelines is one thing, and they need to become visible according to certain credible definitions. Otherwise, the investors are not interested, right? So that is one. Second is, of course, risk. And risk associated with emerging economies already has a very high premium. So again, to de-risk investments, you will not only private capital does not move on its own. Yeah, private capital also needs to be. You need to de-risk investments to draw private capital in. So you would require some of those instruments to lower down the risk. And then the third is cost of capital, and cost of capital will decrease if a large liquid market is created, and that large liquid market gets created by some demonstration issuances, wherein the role of the state, the government, the sovereigns comes into play, which we will touch upon later. The other thing that I just wanted to talk to you about was that in terms of opportunities that we've seen in India, utility scale is now able to tap international markets. But I think in the clean energy space, the rooftop solar will be, it's now, I mean, investors are more familiar. It has now reached a stage where the risk perception associated with it, and even the business models backing it, are much better understood. I would say, in within India, and I think that might be some kind of an example for other countries, and that can be exchanged. Is that DFIs, the role of development finance institutions, will be very, very important in attracting private capital. We have NAFID in infrastructure space, which is not only going to be an issuer with also an ESG focus, but also an entity which will be able to supply credit enhancement at scale. Everything is at needs to be at scale. And then I think in the decentralized space, which is rooftop solar, even a bank like SIDB, right? It has a portfolio which is almost ready to be able to brought to market, and those demonstration issuances will also give a kick, give a much a better fillip. I will stop here.
Great. Thank you so much, Neha. And I won't even try to summarize all those points, but I think excellent points and some very good examples. But before I move to the next panelist, just while you were at it, Neha, if you can just sort of take a couple of minutes and talk about Government of India's recent issuance of sovereign green bonds. And what is your thought around, do sovereign green bonds create an impact? And how do you think clean energy projects and the sector as a whole can benefit? This can also help the South Asian counterparts learn a little bit about how this has fared so far.
Yeah, thank you for that question. And I think it's an important one. When India also joined, came a bit late to the party, also sovereigns came late to the party. So if you look at the global green bond market, it has been dominated by private actors, companies, and financial institutions. But the size and the growth is so fast, right? So basically, there are now around 43 governments which have come to tap this market, and nearly about 400 billion as of the year end 2022 has been tapped by governments, out of which majority of them has again been in USD, has again been in hard currencies. 19 emerging markets. And now why India is special is because it is a ninth emerging market sovereign to issue in domestic currency and onshore. And I think that is an extremely important thing that I want to bring to the table, because what we learned from sovereign issuance was that, of course, regulatory support just ahead of the issuance made certain things possible. Also, the near myth that there is no domestic demand base in, I think that also got broken. Yes, it is a very fledgling demand base, but the bond was oversubscribed by 4 times, and a large number of public sector banks and insurance sector entities subscribe to it. And this is important because for local currency, you were able to avoid the currency mismatch and the volatility that we were facing. But that was not an easy game for international investors, because international investors find it more expensive, especially when interest rates are high, to invest in an INR. So the RBI opened that route of the fully accessible route, which removed the investment cap, right? So, and why these things are important? We also got some premium, which is called the premium on, on the label, which is about 6 basis points. And I don't think that is either the start or the end of the story, because the demonstration effect of that sovereign bond has been that we have been approached by many entities, both public and private, to tap the domestic market. And tapping domestic market and creating domestic market is an important role that sovereign issuance would play, both in terms of integrity that needs to be set in the market, as well as that there is a demand. International investors are also participating, but what we learned from that is that there needs to be a much more targeted investor engagement, both with domestic investors as well as international investors.
Okay, great. Thank you so much for that, Neha. Very insightful. And let's wait and watch how the issuance plays out in the coming months. In the interest of time, I'll move to our final panelist, Deepto Roy, partner at SAM. Deepto, at SACEF, we had organized a side event on NBFC perspective of financing of clean energy projects. And slight gear shift here again. And what we heard is that MSMEs in the region are a big contributor both to the GDP as well as to the emissions in general. So, the role of decarbonizing MSMEs will play a very critical role in, sort of once again moving towards the targets that the region has placed for itself. One key financing instrument that has been very effectively used, at least in India, is the alternate investment funds, which has helped MSMEs unlock, access to capital once again. And so my question is therefore to you, more focused on this instrument of alternate investment funds, and how do you think instruments like this? There's a similar instrument called SIF in Nepal, which exists, but how do you think such instruments can solve some of the financing challenges that the region is facing?
Thanks, Namrata. So I've been a practitioner in the energy space for 17 years now, and I've seen, you started off with conventional energy, the large projects, usually developed by Indian developers, project financed through the institutions. Then we had the sort of the asset management private equity cycle. We are seeing the institution cycle. So we have a lot of sovereign money, pension fund money, long-term money coming into the large-scale project implementation space. And sort of a corollary to that is what Neha was talking about, raising significant amounts of capital. But at the moment, so let's say the green bonds or any form of sort of large capital raising is restricted to a certain size. You do need, as Neha was saying, you need a pipeline. You need to demonstrate that there's a revenue stream. There are challenges, in land acquisition, environmental issues, and therefore you need a certain size to be able to access a large part of the market. Fortunately, sort of the way sort of Indian regulations and the financial market has developed, we have been able to access pools of capital and channel them into parts of the economy which are not potentially able to create scale in the manner that you would need for large scale bond raising. I'm going to talk about alternate investment funds. So the reason why the alternate investment fund market has seen phenomenal growth is because it's an extremely flexible, nimble instrument. It's a vehicle which is registered with the India security regulator. It's got a relatively low level of regulatory compliance and oversight because it cannot access public markets. There's a minimum investment size which is required for a participant in an AIF, which means that only relatively high net worth individuals or organizations can put money into an AIF, which means in turn that the AIF has a lot of flexibility. And because of the way AIF regulations have been structured, they can do both debt as well as equity. Debt in with certain restrictions, but it can do a fair amount of debt-like funding, if I can put it that way. It is nimble because sort of the governance structures, the organizational structures are all driven between the management team of the AIF and its investors, and therefore we have seen a lot of activity on AIFs initially, mostly in the venture equity space. So you saw a lot of early stage investments being taken over by Indian AIFs, but increasingly we are seeing a very vibrant venture debt market growing, and they are driven by the AIFs as well. There was a game changer, which happened, which is that AIFs were allowed to freely access international capital. Initially, it was meant to be, sort of a pooling vehicle for domestic investments, but then SEBI allowed AIFs to go out and raise money internationally, and that's really unlocked a lot of value because now you can, sort of pool capital from outside India and then channel them into sort of investment opportunities in India. AIFs are not traditional means of financing. They have certain very specific restrictions. For example, you can't leverage your portfolio, right? You're effectively investing in sort of individual discrete portfolios. You can't sort of have cash flows between portfolios. SEBI has concerns about AIFs credit enhancing any form of debt or sort of borrowings at the portfolio level. So I don't see AIFs playing a large role in, let's say, bond issuances or participating in the listed bond market. What AIFs will do, and they're continuing to do, is that they're becoming larger in size. They're becoming, as I said, sort of the venture debt market is an extremely vibrant, growing market and has plenty of opportunities. So it will play a very important role in a certain specific part of the energy transition spectrum, which is innovations, smaller companies doing a lot of technology driven, green energy. Where have we seen these activities? So, sectors where we are seeing a lot of interest in terms of almost venture like funding, EV, EV infrastructure. We are seeing a lot of, sort of interest in actually funding very early stage companies which are looking at setting up infrastructure, and that has happened both on the venture equity side as well as the venture debt side. Interestingly, a lot of international private equity is actually doing very early stage transactions in this space because they have realized that building scale in climate change technology is going to take time, but if they can make early stage investments, which is not potentially what they would normally do, but if they make that early stage investments, they have that market leader advantage. So I see them playing a very significant role in the technology driven parts of energy transition, whether it is, as I said, EV, whether it's carbon capture, sequestration transactions. We'll see, sort of a lot of investments happening in storage technology, in hydrogen transport. Uh, and of course, sort of innovative products, accessing carbon markets, accessing, creating derivative credits out of number of interesting technology. So I think that's where we will see a lot of activity from the AIFs. They're very uniquely placed in terms of their flexibility and their ability. As I said, they're getting larger in size and therefore would be able to do much bigger ticket deals. They'll be able to access international investors who have pools of green capital and who need to necessarily invest but may not be able to do it directly, whether because of foreign exchange risks or because of structural risks. And I think it's a very interesting space to watch, and it will play a large role in terms of driving this sector of the transition space.
Great. Thank you so much, Deepto. I'm looking at the clock as well. But you've also addressed the second question. So thank you for that. Just maybe 1 minute for all our panelists for the last round that we will take and then open up the floor for some questions. Deepto, one question for you I'll just sort of quickly ask is interestingly, what we're seeing is the financing strategies have to be a mix for large scale, medium scale, small scale, emerging technologies. And a lot of our, regional stakeholders here are also looking at that continuum spectrum of clean energy transition. So, can you throw a little light on how the AIFs developed in India? What was some of the reasons why we took up an instrument like AIF so that we can nudge or excite some of the other countries to start looking at this instrument as well? Just a minute, but please.
Yeah, sure, sure. No, I think sort of the driver behind the AIF market was allowing Indian vehicles to pool capital. And as I said, it started off as a domestic pooling vehicle. You were able to raise funds from sophisticated high net worth individuals or funds in order to invest them in private transactions. So one important differentiation between, let's say, a mutual fund and an AIF was the far more flexible approach that you allowed AIFs. SEBI realized that it's a product that's working well. There is a compliance and governance framework which is in place, which does allow monitoring. So it's not a, not a, the concerns that they have that this can be sort of fly by night collective investment schemes were dispelled with. And then they started giving AIFs more flexibility, including accessing international markets. Um, as I said, there are restrictions. You have restrictions in your ability to invest about a certain size into specific companies. You do have, you're not allowed to do pure debt. You can only do debentures or debt instruments. So AIFs are restricted by law in only being able to invest in instruments. But given the flexibility and, sort of doesn't have the constraints, let's say, that the NBFC sector has in terms of the significant regulations, the requirement to maintain different levels of capital, and a lot of that has to do with the fact that you only access sophisticated investors. I think it's a very powerful, very flexible model, and it's easily replicable because the the guiding principles are relatively simple.
Okay, great. Thank you so much, Deepto, for that. Neha, I'll move to you for the final question of this panel. For you, can you briefly highlight some of the sectors where green bonds can be used for raising capital? One specific question is, can unconventional clean sectors like energy efficiency particularly benefit from green bonds, particularly because there's a strong aspect of definition of green bonds, associated with its issuance? So maybe a minute if you could throw some light.
Okay, so the energy efficiency is probably the elephant in the room. Okay, so and we know that even for decarbonization strategies, it can play a huge role, but we have not really been able to crack the conundrum of how to finance energy efficiency. I mean, I think big industries have measures to how to be more energy efficient, but I have not been able to find a clear-cut answer for that.
So even from an international perspective, are there any green bond issues
Yes,
for energy efficiency?
yes. So I think Europe is replete with those cases for energy efficiency. I think in the Indian scenario, I see my former colleague sitting over here, Poonam, and at GIZ, I think we did take some interest in that. I think in the Indian scenario, there will be a combination of institutions which will have to come into it with some kind of innovative structuring. So that is my initial response to that. And what was your other question? What is
The sectors in general for green
the
bond?
sectors in the clean energy space? I think utility will keep on, going forward. I think in terms of how to even bring a larger scale of green finance into different kind of I mean, how to increase the pipeline of green projects. And there, like AIF has been talked about, I think green InvITs, infrastructure debt funds, all of them are at very initial stages. And they are, with some incentives, with some regulatory support, I think that should be the way to focus on. So that would be something that I would say. And states. I think states themselves can actually really will have to be at the forefront of using green instruments to drive their capex financing requirements in the clean energy space. There was one more thing that I just wanted to push, just highlight. There's some very innovative things which are happening in India. Now, green deposit is one such thing. So, retail investors, that kind of money going back into green projects, which is backed by clear definitions, is something that is being tried. And of course, it is just the starting point. There are a lot of issues around it in terms of, how do you verify and all of that. But I think it is going to come into place. And I was also talking to regulators, both RBI as well as SEBI. Uh, they are very, very interested in making this market grow. So they will put in structures both on the side of credibility as well as on looking at how corporates, how different kind of institutions and DFIs can take this forward. So this was just something that
That's
I
great.
thought that
No,
I'd
that's
read.
very encouraging. Thanks so much, Neha. I'll move to Mr. Hari Krishnan. And the final question for you, Mr. Hari Krishnan, is that IIFCL has invested in an InvIT, right? A green energy InvIT. And so, what is your perspective on how this vehicle, the Infrastructure Investment Trust, can play a role in addressing the financing gaps that we are facing as we are looking at the clean energy transition? Maybe for the region, because you did hear that Nepal is also considering, an InvIT framework as well. So, a minute for you, please.
Yeah. So InvITs, by and large, has been a very successful investment vehicle, and for lenders also, it is taken care regarding the diversification and maintaining the stability of the cash flow. So if the investors are being considering that as a very safe investment, then as a lender, I am much better placed. But however, there are some issues which continue to remain in the sense that lenders in infra projects have been traditionally been used to an SPV level funding, where we would have the kind of comfort to fall back on the promoters and sponsors support in terms of at the rainy day. Ultimately, as lenders, we have to look at the various risk scenarios, because these projects are long tenor and anything can happen after 3 or 4 years, or even after the implementation, or even after the operations have commenced. But that kind of a comfort is not available under the InvIT structure. And although me and my fellow lenders are all still very bullish on the InvIT model, but still, if this aspect is taken care, then I think it will be one of the major impediments to be removed, and in which can really open up in a much bigger way.
Okay. I think that's great and important to know, particularly for countries who are starting to look at, how this mechanism can help in unlocking international capital. I'll move to our panelists from the NBFC and private equity sector from Nepal and Bangladesh now. And this is a common question. This is more on understanding which instruments have either been deployed or you're considering deploying to basically access international finance. So, a minute maybe you can take.
Thanks, Namrata. So as I pointed out earlier, we are working on green bonds, and in doing this program with green bonds, we have found out that the country risk is quite high for Nepal, right? And there is a way to get around it. So we are working with MIGA to get their insurance program in place so that the country risk is reduced for our prospective investors. And even if the country risk is reduced, there's a great challenge in reducing the currency risk. So when we go to the investors, it's either a USD bond or an INR bond, where INR bond market is a bit shallow, so we have to consider USD bond, right? And if we go for a USD issuance, then there's a currency risk associated with it. So we are also working with TCX to see if there can be any long-term hedges in place to reduce those currency risk. And even after you reduce those currency risk, right? As Mike earlier pointed out in his presentation, that the cost of capital might be even higher than the domestic capital. So how do you bring that cost down? Is, I think, by a combination of blended finance, if you incorporate into that structure. So we are considering these three things while we are going for green bonds issuance. Thank you.
Thanks so much, Vishal. Mr. Khatiwada?
Similar question.
Same question.
So in terms of the basically the transition can happen when there is a cost of capital is acceptable to developer as well as the investor. So in terms of the managing those cost of capital, obviously blended finance approach is the right approach. So in fact, we have been in discussion with the government of Nepal to come up with the hybrid annuity model or similar kind of the structure, especially on the transmission infrastructure, because generation infrastructure private sector are moving very fast, but there are very lesser interest in the transmission infrastructure to mobilize the capital of the private sector into the transmission infrastructure. That is one area, that cost of capital, so that the energy transition can happen. So similarly on the green bond issuance, obviously two aspect. One is um, the international capital market, which has been evolving in the larger way. We have to tap those capital to blend into the local capital. In terms of the local capital, also there are some level of the credit enhanced instrument like energy bond that we have also issued in the very lower cost of fund, and the blending those lower cost of fund or directed kind of the investment mechanism can be blended with the commercial capital, so that the project can make the viable in future. Thank you.
No, great. I think all great points. And Mr. Pavel, same question.
Yeah, we in Bangladesh, I mean, it called we are working with ADB, Asian Development Bank, for issuing a green bond for the international market as well as for the local market. And we are focusing on the areas where we can have uh, cash flows in US dollars. Like we are focusing on ground mounted solar projects. Those projects, tariff is in US cents, and also we are focusing on garments industries. They have good revenue in dollars, but issuing, raising capital, international capital through green bonds and investing in local currency. It's actually projects with local currency revenue is very challenging. So we are focusing this particular areas, and in fact, the challenge we faced regarding raising the capital is not like that. In fact, we didn't have much projects in the market which requires actually funding. Like even in recent years, we didn't have many ground mounted solar projects or similar kind of projects which require credit support. We are backing those. Now, government is focusing on this because we have a huge target, and government has already awarded many projects at this moment, and many projects are coming up. And we also have long experience in actually implementing IPP projects. Around 12,000 megawatt of IPP projects have been implemented by the private sector, and many are actually developed by the international companies. So we can see interest from the international market in our ground mounted solar projects, which will actually become the key areas where we can attract international capital in renewable energy. And also government is doing, uh, specifying some areas like those are solar parks kind of thing, because the land is a big constraint for Bangladesh. We cannot have good amount of land, so government is identifying the areas where those projects can be implemented, and where local and international companies can participate in implementing those projects. Thank you very much.
Thank you so much, Mr. Pavel. With this, we will close the panel discussion, but I can see our panelists for the other session have also arrived. But maybe we can just take two questions from the audience if anybody has any burning questions for this panel here. You can see one hand up there and one here. So,
Yeah. Hi. I'm Rakesh Jha from Krishna, India. And my question is to representatives from IDCOL and IIFCL. What we know and heard in any context, whether in India or any other country, that most of the financing benefits have gone to the bigger projects. Reason being, they have healthy balance sheets, and it's not that much of risk involved in that. If I talk from Indian perspective, rooftop solar has huge potential. Indian government has set aside a target of around 40 gigawatt for rooftop solar project. But if you see, the achievement is not that good. 8 to 9 gigawatts so far. Whereas we wanted to achieve this target way back by 2022. This has been extended to 2025-26. My question to both these organizations, that uh, have you experimented any innovative financing, especially de-risking instrument, to facilitate financing in this very high potential sector of rooftop solar?
Thank you. We recently have started financing rooftop solar projects. I know in focusing the industries mainly, but at the same time, we are actually trying to develop local companies who can actually support the small sized companies through OPEX model. So we can finance those OPEX companies, RESCO companies, and they can actually support the small organizations from small industries. This is one thing. Another thing is also we are actually trying to develop local solution providers who can actually take support from us, technical and financial support, and actually support the market. So we have actually started with large companies. You're right. I mean, large companies have they have huge roof space and also they have huge demand. So which I mean attracts the capital. But at the same time, we are also very much keen to actually support smaller companies. And government of Bangladesh has 2 years back has issued this net metering guideline, which is actually beneficial for all types of companies, smaller or bigger. So these are the things we are now actually pursuing, and our renewable energy target will have good portion of rooftop solar, and which cannot alone be served by bigger companies. So we have to have some mechanism to attract uh, smaller companies in installing rooftop solar projects. Thank you.
As far as IFCL is concerned, we are not on the retail financing side, but we have a product which is called as the refinancing, where we do for institutions which do retail financing or institutional financing. So we do refinancing for them. But of course, as the gentleman had pointed out, we have not seen much traction in terms of refinancing for institutions where the ultimate utilization is on the renewable energy side. So we would have to revisit that issue.
Okay, thank you. One last question, but
Hello.
yeah.
Uh, so my question is to Neha, ma'am. So basically, I wanted to ask you, ma'am. Like for example, we see in news a lot of climate finance being flowed from the outside. Maybe in terms of adaptation, I'm talking about. But like we see those figures, but I want to see is there a mechanism to track the utilization of that money to the community, because we see a lot of transparency at the higher level, but then it like there's a lot of opaqueness when it goes down. So I just want to know.
Uh, Well, I can just briefly comment on that. When if you're talking especially in terms of use of proceeds and tracking of proceeds, uh, as far as mitigation projects go, it is only up to the level of the company which uses that. So yes, to the next level, there is no mechanism which is required by international organizations in that sense. But if you look at the regulation, then SEBI is getting very active on at least asking even the corporate players to design environmental and social risk assessments so that there is no harm at least that is caused to communities in case they are looking at financing large mitigation or adaptation or environmental projects. They're also asking now for impact report. So it is very, very early stages, but I think the regulators are quite conscious and active that some kind of reporting and disclosures will have to be made around that aspect. So it is at I think I will just stop here, but I can take your question offline as well. Thank you.
Okay, thank you everyone. With this, I'd like to call this panel a close and thank you all the panelists who could join us today and throw, extremely enlightening, inputs on this topic. Thank you so much. I will request Shankar Khagi, USA from USA Nepal, and Roseanne Perez Cruz to please once again come up on the stage and felicitate our panelists, please. If we can have a round of applause for all our panelists. Start with the maybe. Thank you, Shankar. Roseanne, can I request you to felicitate Vishal? Mr. Kadiwada. Mr. Pavel. Thank you so much, everyone. Please join us for a group photograph. Like, please, just for a minute.